Hey there, welcome back to Personal Finance with NestEgg, the #1 place to learn about money. I'm Jennifer, and I spent most of my life in finance. Started working at banks like JP Morgan and Goldman Sachs at the age of 17 and graduated top of my class from NYU and Harvard Business School, studying, you guessed it, finance and business. And now I work with companies like Bloomberg, WeWork, and Walker Edison, teaching their employees all about financial literacy and wellness. Today, we're kicking off our life insurance series. It's something we've been working extensively with our clients on since the pandemic hit. So trust me when I say life insurance is one of the most misunderstood topics in personal finance. And in particular, the difference between term life, whole life, and universal life. This video in particular will focus on term life insurance and the importance of having this basic protection already in place in your 20s and 30s. By the end of this video, you'll understand very clearly what term life insurance is, the pluses and minuses of term life insurance, and why you should have this as part of your portfolio. And if you stay until the very end, we'll also reveal the reasons for purchasing a term life policy sooner rather than later, even if you may not have a family or any dependents yet. I'll start first by explaining some key life insurance terminology. Then I'll dive into the 3 main reasons for buying life insurance, whether that's term life, whole life, or any other form of life insurance. One of these reasons is instant estate creation. Not many people realize that life insurance is the only way to do this. In any case, once you have this basic life insurance knowledge, we'll jump into the nitty-gritty of term life. Over the next few weeks, we'll also be going through whole life, universal life, and other types of insurance products. So don't forget to subscribe and give this video a thumbs up if you're interested in learning how to best protect yourself and your loved ones financially. So terminology. The first term you need to understand is the word term. I'm not trying to be funny here, seriously. The word term, when we speak about life insurance, refers to the specific period of time when your life insurance policy is valid. Within this specific period, this term, if you die, your life insurance policy will pay out the death benefit. This death benefit is also known as the face value on the insurance policy. So when you hear someone say that they have a $500,000 life insurance policy, that $500,000 is the face value and the death benefit of the insurance policy, the amount that will be paid out upon death. With a life insurance policy, you also have to choose who will get the money when you die. This is called the beneficiary, such as your partner. You can also have multiple beneficiaries, such as your children, or you can select a legal entity as your beneficiary, such as a school or charity. And last but not least, the premium on a life insurance policy is how much you have to pay for the policy. You can pay your life insurance premiums once a year, every 3 months, or every month. Paying monthly means that the premium each month will be a bit higher than if you were to pay quarterly or annually. So why even buy life insurance? What's the purpose? Here are the 3 reasons for all types of life insurance. Reason number 1 for buying life insurance is survivor protection. If you have people that depend on your income, life insurance makes sure that your loved ones will have the money to pay for rent and buy groceries, even when you're gone too soon. Do you have some form of life insurance? Drop us a comment below and let us know. Reason number 2 for buying life insurance, and something that people don't often talk about, is estate creation, which means that you leave an inheritance to your loved ones. When most of us think of creating an estate, leaving an inheritance, we often think about our earnings, savings, investments, and other assets that we accumulate over time. Life insurance, on the other hand, is the only way to create an immediate estate for your loved ones via the death benefit, as I mentioned earlier. This estate is created the moment you pay your first premium. Younger families that are just getting started and don't have much in assets may find this aspect of immediate estate creation very appealing. If you're enjoying this video so far, don't forget to give us a thumbs up and hit that subscribe button. YouTube loves it when you show us some love. And they're more likely to push this video out to other folks like you who are looking to learn the best ways to protect themselves and their loved ones. So thanks for showing us some love on YouTube. Now, reason number 3 for buying life insurance is estate preservation. The death benefit can be used to pay inheritance taxes and federal estate taxes so that your assets do not have to be sold to cover these costs. These 3 reasons I just explained, survivor protection, estate creation, and estate preservation apply to all life insurance policies, term life, whole life, universal life, and so on. Now, let's talk specifically about why people buy term life. In a nutshell, it offers basic protection at an affordable price. This is why most of our younger clients and recent grads go for term life initially. Term life is designed to protect the people that depend on you in case you die during the term of the policy. If you die within the term policy will pay out the death benefit to your beneficiaries. If you don't die within the term policy will simply expire. You get nothing, and your beneficiaries get nothing. In other words, your term insurance policy is worth zero if you do not die during that specific term. We're going to use some real numbers that we recently ran for a 24-year-old female client of ours. We'll call her Evelyn. Evelyn buys a 20-year term life insurance policy with a death benefit of $500,000 and designates her partner as the beneficiary. If Evelyn dies within 20 years, the term policy will pay $500,000 to her partner. If Evelyn does not die within 20 years, or if she dies 20 years plus 1 day later, her term life policy simply expires. Evelyn gets nothing, her partner gets nothing. Just 1 day after the policy expires, and you get zero despite paying in all those years. Having said this, for many people, term life is attractive because you can get a pretty sizable death benefit and peace of mind at an affordable price. A basic 20-year $500,000 policy for Evelyn is around $25 a month. That's like a glass of wine and maybe half an appetizer in New York City. That's why you hear about term life insurance policies all the time. It's cheap relative to other types of life insurance like whole life, universal life, and so on. And it can protect your loved ones during a critical phase in your life. People also talk about it all the time because it's super simple to understand. You buy it for 20 years, it lasts you for 20 years, and protects your family for 20 years. Unlike other types of life insurance products, there is no cash value, no borrowing. What you see is what you get. Always remember, though, with term life, if you do not die within the term of the policy, which in this example with Evelyn is 20 years, you have nothing and you get nothing back. Most people new to life insurance are completely shocked when they hear this. So while month to month, the policy may be affordable, over 20 years, Evelyn would have shelled out $6,000. And if she didn't die during the 20-year term, that $6,000 is gone. Plus, if Evelyn were to buy a new life insurance policy after the expiration of her 20-year term life policy, it would cost her significantly more because she'd be buying it when she's much older. The older you get, the more the policy will cost you. So the biggest pro for term life, it's relatively cheap and can fit almost any budget depending on the amount of death benefit that you choose. And the biggest con, it's only for a very specific period of time. And if you don't die within that period of time, you get nothing back from your term life policy that you've paid into. And if you learned something new here today, don't forget to give us a thumbs up and hit that subscribe button. And if you have any questions at all or are interested in exploring the right life insurance options for you, shoot us an email at jennifer@diamondnestegg.com. As promised in the beginning, let's now talk a bit about the 4 reasons why you should seriously be thinking about buying a life insurance policy in your 20s or 30s, whether it's term, whole life, or something completely different. The first reason for buying life insurance when you're young is that the cost of purchasing a policy goes up with age and with deteriorating health. So generally speaking, the younger you are, the healthier you are, and the lower your premium will be. If we go back to the example of Evelyn from earlier, as a reminder, Evelyn is 24 years old, and her 20-year $500,000 term life policy costs her about $25 a month. That very same policy would cost her sister, who's 37 years old, about $40 a month. Now, month to month, that may not seem like a big deal, but it adds up over a 20-year period. Over that time, Evelyn would pay $6,000 in total for her term policy, and her sister would pay $9,600. The second reason you would buy life insurance in your 20s is that you're married, or you're planning on getting married, or you have dependents, whether it's your parents, your grandparents, your children, your nephew, or your siblings, or if you plan on having children soon with your partner. Not getting to share the life you plan together is unimaginable enough already. Just think about leaving people that depend on you financially without the resources to pay the mortgage, fund daycare, or a college education, or to cover your debts and final expenses. The third reason for buying life insurance now versus later is this. If you become sick or pick up a chronic illness, it becomes a lot harder to find a company that will provide an affordable life insurance policy based on your new health conditions. But if you buy your life insurance now, you can lock in those low rates for 10, 20, or even 30 years. And for a few extra dollars, you can even add on an option called a guaranteed insurability rider. A guaranteed insurability rider allows you to increase your life insurance coverage, your death benefit, during specific periods without having to go through a new health screening. People tend to increase coverage when they get married, buy their first home, or start having children. What this means is that the insurance company has to approve the increase in coverage or death benefit no matter what, even if your health has gotten worse or significantly worse, because everything is based on the results from your original medical examination when you first bought the policy. The fourth reason for buying life insurance is if you're in debt. With student loan debt set to hit a record high of $1.7 trillion, it's pretty hard for most 20-somethings or 30-somethings to be without debt these days. Say that you have a cosigner, a parent, for example, on your outstanding student loans, your credit card debt, personal loans, or any other type of debt. If you were to pass away, your cosigner could still be responsible for repaying your debt. In this case, having a life insurance policy that pays a death benefit to your cosigner would help your cosigner pay off this debt as well as your funeral expenses and other outstanding bills. What I've done so far is give you the basics of term life. Keep in mind that there are all sorts of different ways to customize your life insurance policy to give yourself as much flexibility as possible to accommodate changes to your life and financial circumstances over time. As our trademark saying goes, everyone's financial journey is different, and insurance is not a simple topic to understand. If you have questions or are interested in chatting further about term life or any other type of insurance product, drop us a comment below or shoot us an email at jennifer@diamondnestegg.com. Thanks for watching. If you enjoyed this video, please give us a thumbs up and hit that subscribe button. We'll be back next week to talk about whole life insurance. In the meantime, hang around and check out the other money-saving, wealth-building videos on this channel.